In this week's data, inventory came in unchanged from last week. That was a little surprising to me, as I had been expecting inventory growth across the country because buyers have stopped cold as the mortgage rates spiked. But instead, what we're seeing is a tug of war between buyers and sellers just have no need to sell right now. Inventory was flat or down most everywhere across the country. It's still climbing and up in Austin and Phoenix, two of the arguably hardest hit markets. The Florida markets, Fort Myers, Tampa, Orlando, all obviously had fewer new listings this week due to the hurricane. So inventory fell in those markets by a few hundred each. This is notable, but not really enough to move the needle nationally. I will spend more time on the local markets this Thursday in our monthly webinar. There's a link to register for that in the description below. If you are trying to keep up with this rapidly changing market, or if you have buyers and sellers who need to understand, you should join us. That's this Thursday, October 13th at 10 a.m. Pacific. There's a link to register in the description below. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be the time to step up. Go to altosresearch.com, book a free consult with our team because everyone is worried about what's happening right now. They need you to help them see clearly. The data we cover here in these national videos is available for every zip code in the U.S., so join us, dive in. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's the data for the week of October 10th, 2022. The available inventory of unsold single-family homes is unchanged this week from last week at about 561,000. As I mentioned, this was a little surprising to me. We saw 3 weeks of inventory rising as buyers reacted abruptly to the higher interest rates. It's like the sellers take a few weeks to notice that there are no buyers. So now the sellers have noticed, they've recalibrated and decided not to sell. So we have very few new listings this week, about 20 to 25% fewer than normal. Only about maybe 58,000 new single-family homes hit the market by our count. There are, of course, a lot fewer sales happening than normal, too. So inventory stays flat. In the next few weeks, new listings volume will continue to drop. So inventory should start to fall back for the rest of the year. In the webinar Thursday, we'll share the latest in the inventory forecast for each week for the rest of the year. If you've been paying attention, you'll know that we still anticipate starting 2023 with a shortage of homes for sale. It's kind of shocking that we're in this scenario, but that's what it looks like. Anecdotally, if I just look around my neighborhood, I can see very few active listings. Some that were on the market sold, others were probably withdrawn. And maybe they'll try again in the spring, but there's just nothing on the market. And it seems unlikely to change, at least until the spring. Home prices around the country are receding now each week. The median price of single-family homes in the U.S. is $434,000. This will be closer to $400K by the end of the year. It'll still be 10% higher than where last year ended. Prices are falling quickly enough now that if you that you can see how next year will be flat at best. The people forecasting significant home price declines for 2023 are also assuming deep recession and rates staying elevated. So when I talk about home prices being flat in 2023, that's based on what we can already see in the market. We can see inventory up year over year. We can see price reductions high. And at Altos, we don't forecast economy or jobs or mortgage rates. And those are big variables that will come into play over the next year. We're focused on what we can already see in the housing data, and that already tells us a lot. So one of those signals that we can already see are the new listings each week. The median price of the newly listed cohort is down this week to $385,000. There's lots of room for this metric to fall to. You can see the light red line here at the far right end of the chart. Any sellers now are acutely aware of the change in demand, the change in affordability for buyers. So each week, the price of new listings is falling pretty quickly. It's late in the year, so it isn't uncommon for new listings to discount before the holidays, but these are pretty bearish moves each week. It's the opposite signal of what we saw in the fall of 2020 and 2021. The fall off in immediate sales is pretty dramatic in the last few weeks as well. I'm using a percentage chart here. This is the percent of homes on the market that are going into contract immediately after listing. There are always some that go quickly, but during the pandemic, it was crazy. Over 30% of the new listings going into contract essentially immediately after listing. So now we're down to only 16%, maybe 10,000 or so homes in a given week. You can imagine that these are unique properties, rarely available in difficult to find neighborhoods. The kind of buyers who are maybe not impacted by mortgage rates. But look how dramatically this line has fallen in the last few weeks, the far right end of this chart. In August, a surprising number of buyers were still moving quickly when rates were closer to 5%. Then in the last few weeks, rates have spiked to 7% and poof, dropping like a rock. So this is one of the easiest leading indicators that any buildup in inventory we may see in October, for example, is a function of ice-cold buyer demand rather than panicky sellers. You can see the same slowdown in sales volume when you look at this view of the active market versus pendings. The light-colored bars here are the total inventory count in a given week, the active inventory. Each bar is a week. The dark bars here are the count of properties in contract at that same time. Normally in the fall, contract volume starts declining, but the volume right now is 36% fewer in contract than last year at this time, and it's falling quickly each week. Maybe 358,000 single-family homes in contract phase right now. By the way, some of these contracts will fail, and many no longer have backup offers. Some will get relisted maybe in January. So there will be lots of signal to keep watching just after the holidays. And price reductions are the last leading indicator we'll watch today. This is a different view of price reductions than we've been sharing lately. This is looking at the yearly cycles. And from this view, it looks like we have at least a month of more price reductions. It hasn't rolled over the top yet. You can see the spike at the right end of the chart. The pace hasn't slowed down. So this tells us, and tells current sellers that have more price cuts to expect to try to move the house before the holidays. The second week of October is traditionally the peak of price cuts for us. That'd be next week when we report it. But it looks like November at least before it peaks this year and resets for the holidays. So we'll see how much more this year goes. At this point, price reductions look pretty bearish for future sales transaction prices. Again, this is another indicator that home prices probably fall in 2023, and that's even without accounting for a recession. So one thing for sure is that the local markets are behaving very differently from one another right now. This Thursday in the Altos webinar, we'll spend time with those local markets. If you need to understand the details of what's happening right now, you should join us. There's a link to register for the webinar in the description below. We'll have we already have well over 1,000 people registered, but you can still get your spot. So click below, register, and then be on time for the start of the webinar to make sure you get your spot. We have to limit these to 1,000 attendees, and so you should be among them. Okay, that's all the data we have time for this week. We'll see you next week, and we'll see you Thursday.